Chasers! If retirement is just around the corner, the current financial climate might make you feel a little uneasy. Watching the markets fluctuate might leave you worrying about whether your superannuation will be enough to see you through. In today's episode, we will be reviewing 5 useful tips to help you ease into the next chapter towards retirement. I'm Chris Becks, your host, a business and financial advisor with over 40 years experience and the founder of the multi-award winning CBEX Business Solutions for Good. And as this is a financial planning topic, as an authorised representative of Interprac Financial Limited, I'm obliged to give you this general advice disclaimer before we begin.
The information provided is for educational purposes and is general advice only, as we did not take into account your investment objectives, financial situation or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. You should also consider the relevant product disclosure statement before making any decision relating to a financial product. Chris Becks is a director of CBEX Financial Solutions and an authorised representative of Interprac Financial Planning Proprietary Limited, AFSL 246638.
Now that is done, let's dive into this episode. The current impact of geopolitical statements is causing havoc on the stock market and flows on to our superannuation fund balances. But it's not a time for hasty moves though. If you are concerned, a calm review of your current portfolio and investment strategy may be helpful. After all, the average Australian spends around 20 years in retirement, so it's important to create a retirement strategy that takes into account not only the current market conditions, but also the risks and opportunities in the years ahead. As one of the most significant retirement assets, your superannuation needs a careful, considered assessment as you approach any new life stage. So let's look at 5 steps that you can take to help maintain your retirement fitness. Step number 1. Review your risk profile and portfolio allocation. Check your super portfolio's risk profile. Generally speaking, investors take a high growth approach when they're younger to take advantage of higher returns. However, as with normal share market cycles, there will be fluctuations in the share market. Having a long-term strategy gives you the time to recover from any market downturns before retirement. Older investments may prefer a more conservative investment strategy that can help stabilise returns by potentially protecting super from share market volatility. Step number 2. Calculate your retirement expenses. Be realistic about the living expenses you'll need when you finish working. For some, it may cost less to live in retirement because of reduced expenses, such as commuting costs and maintaining a work wardrobe. On the other hand, you may plan to travel more or buy a new vehicle or renovate your home. So these expenses need to be factored in when working out how much you'll need. According to the Association of Superannuation Funds of Australia, ASFA, the annual average budget to maintain a comfortable lifestyle in retirement is $73,077 for a couple and $51,805 for a single person. And to maintain a modest lifestyle, the ASFA estimates a couple will need $47,470 and a single person will need $32,897. Both estimates assume you already own your own home. You can find easy-to-use tools on the Money Smart website to help you work out your budget and also estimate your income from super and the age pension. Step number 3. Take action on mortgages and loans. Entering retirement with manageable or small levels of debt can contribute to feeling more financially stable. If you're still repaying a mortgage after you've retired, you You could also consider downsizing your home or using superannuation funds to pay down the debt, keeping in mind the tax implications and ensuring that you comply with superannuation laws. If you're considering either of these courses of action, we'd be happy to explain your options and obligations. Step number 4, check your timing. Understanding when and how you can access your super is important. You can use your super to fund your retirement when you reach preservation age, which is from age 60. You can also use your super to begin a transition to retirement income stream, or TRIS, while continuing to work. Alternatively, if you continue working beyond your preservation age, you can withdraw your super once you turn 65. There are also circumstances in which you can access your super early, such as illness and financial hardship. However, eligibility requirements do apply. Step number 5. Decide how to withdraw your funds. You may be able to withdraw your super in a lump sum if your fund allows it. This could be the entire amount you have invested, or you could receive regular payments. If you ask your fund for regular payments, paid at least once a year, it is known as an income stream, and your super account transitions from the accumulation phase, where contributions are made, to a pension. There are minimum withdrawals that you must make once you commence an income stream from super. For example, for those under age 65, a minimum annual withdrawal of 4% of your super balance is required, and this drawdown rate increases as you get older. Therefore, in summary, the 5 steps you can take to retire financially fit are: number 1, review your risk profile and portfolio allocation. Number 2, calculate retirement expenses. Number 3, take action on mortgages and loans. Number 4, check your timing. And number 5, decide how to withdraw your funds. There is a lot to think about as you approach retirement, so if you'd like to discuss your retirement options, please call our team on 03 55 612 643. Thank you for listening. I'm Chris Becks, and I look forward to presenting another episode to you real soon.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram at CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.